Well, this is the first quarter in which you will start seeing the low base effect of last year come into play with regard to earnings. So on that front, at least on a year-on-year basis, you will see quite a few companies reporting a strong growth in earnings. Now, you've seen a broad-based economic recovery in the second half of the financial year, and that gathered pace in the fourth quarter. That is likely to prove to be a tailwind for quite a few of these companies. Now, according to Motilal Oswal, as many as 14 out of 20 sectors will post over 20% year-on-year growth in earnings in the fourth quarter. And even within that, you'll have metals, private banks and automobiles that are expected to dominate. Now, at the same time, you could see some pressure building on margins on account of the rise in commodity prices that we saw throughout the financial year, and Citi sees that margin compression is likely to impact the sequential trends for discretionary companies as well as IT companies and healthcare. Now, commodities may well be in focus for the reason that I mentioned. A lot of people saying we could be entering a commodity super cycle, so the metal counters and particularly the steel counters will be outperformers. Having said that, management commentary will be key to watch out for on the whole, because you've had a resurgence in COVID-19 cases since the middle of February, and that could change the outlook for economic recovery and earnings recovery going forward and going into this financial year. What are the sectoral outperformers? I've named a few. Steel, most definitely, and cement players too will be watched out for. In the auto pack, you have the passenger vehicle segments that have seen strong volume growth, and you have Tata Motors that may be an outperformer within this pack. Consumer staple companies saw strong volume growth as well, and earnings should keep pace with that. IT will be front and center next week. They've seen the demand scenario prove to be supportive even in the fourth quarter, and there have been quite a few large deal wins that could boost earnings. Private banks and SBI might have quite the good quarter because of the economic recovery that you saw. And of course, healthcare and the diagnostics sector will remain in focus with COVID-19 still enduring. There could be a few laggards as well, particularly the two-wheeler segment, and that's because volumes have been under pressure and so have the margins. You have PSU banks that could see some pressure on the provisioning front because you could see some weakness in asset quality, and also the real estate companies, though they've seen good pre-sales, they could see profitability suffer just a little bit.